Hi, today is Sunday the 22nd, and this is the weekly recap. I suggest you look at the SPX outlook. I believe the market will probably drift down in steps. The good thing lately is that VIX and SPX are almost perfectly anti-correlated. If we look at the latest chart as of Friday at the close, as you can see, almost perfect anti-correlation. That can explain why I have kept on my trade a lot of negative vega or relatively larger negative vega on the upside. So that should probably maintain this T plus zero fairly flat. And I've also made sure after the Pfizer incident that this call credit spread is way above the IV inversion, the trough, which is probably around 37.50 at the moment. So I would say the CCS is safe. This trade is not doing fantastic. We don't necessarily have to trust the closing prices. I think it closed more around minus 300, doesn't really matter. And what we can see is that I have about $200 to gain in this current configuration. And I've got 90 cents or $90 from the call credit spread. So it shows that there's probably not much to gain, maybe $100 on the put side. So I will probably do a little bit more on this trade. What I've done last week is I can show my trade log. And of course, all adjustments are logged also on Slack, is that basically I started reducing the trade. And I started reducing the trade for one reason. The downside hedge that was probably around here didn't have much of a purpose, and I wanted to reduce capital. So now the capital usage for this trade went from maybe about 13 to 5. It's a little bit too low. That's why I said that, yes, I may add some capital back. And if I do so, it will still be quite reasonable. And if the market drops, I would consider adding one broken butterfly here just to get a little bit more theta. This will probably only give me $40. So it's not that much. If the market drops, I may get a better price. I'm not saying that there's a one way of doing it. I mean, probably the simplest way would be an iron condor, checking that it doesn't really disturb the grid balance. As you can see, I would have some theta, vega would be okay. So I will update you over the next few days about the course of action. There's no real rush. I'd rather see whether the market bounces on 35.15 or lower. At present, if the market goes to the 35.20 area, my delta will still be flat. I mean, it will make absolutely no change to this trade. Problem is that theta is very low. And if it drops to the low, let's say 34.30, I mean, this trade would not be in any form of danger. So it is no real rush, but of course now in the last 4 weeks, it's time to capture some theta, and this trade doesn't have much of it. So yes, I will probably add some theta at the most reasonable cost in terms of capital usage, because now I intend to keep this trade until expiration week. So that is it for this trade. Minor tuning, nothing much to do, unless of course the market crashes, but I don't think it will. And now if we look at January, I was a tiny bit too greedy maybe. I still have my hedge over there, and I added one broken butterfly on with shorts on 32.25, and I wanted to add more of them at the same price, and the market makers didn't give me a good price. So it was either not too enticing, or maybe I am too demanding, considering that the volatility has dropped quite dramatically. So the good volatility levels, the good pricing that we had for a few months, maybe we must readjust our expectations to something more acceptable. If volatility goes back to, let's say, 20 or lower, my combos will go closer to the money. As you have seen, now I'm no longer using the wider broken butterflies, but the regular 100/75, and it will be time, if the market goes back to normal behavior, to move them back closer to the money where I get more theta. So now what shall I do? If the market shows signs of going much lower, I will probably get a credit by placing my other broken butterflies lower. If volatility stabilizes and stay in the same area, I will probably either try once more on the same strike selection, or I may even go a little bit higher. Of course, this will not be as exciting in terms of price. I don't believe this price is correct. It's definitely not that good. So anyway, that would be something I would, of course, that we are pricing. I would love to have, but I don't trust it at all. But you see what I'm trying to do. Adding some theta while keeping it quite safe. I've been also thinking of dropping the downside hedge, which doesn't really make any sense. And if I can get 30 cents or more, I would probably get rid of it. Although I am not too worried about the capital usage right now. Let's see, 25 cents. Yeah, this sounds about correct. So I could get 25 cents to reduce it. Doesn't make much of a difference. As you can see, this lowest structure has got a negative theta because if I remove it, I got a little bit more theta. I can definitely look at that. Doesn't make much of a difference to get rid of it or not. I don't have any capital issue, so I may keep it longer. And if the market drifts down fairly slowly, these lines will start picking up and it will be a good thing to have that kind of hedge. So really, I just want to add some capital into this trade. I over-hedge on the downside. Volatility has really dropped. So of course, the market is less exciting, but we must try and make money with what we've got. So that's where we are at the moment. It should be a fairly easy week, unless of course the market surprises with a sharp fall. Okay, thank you for watching and I'll see you Monday on Slack. Bye for now.